Hi, everyone. Thanks for having me, Megan. Thanks for having me, IFAI. And thank you, Fiesta, for sponsoring my session. I'm going to start us off with the screen share here. Great. Well, everyone, thanks again for having me. Today, I'm going to talk a little bit. Today, I really want to talk about things to do in 2021. But first, I think before I get into that, I kind of want to share my 2020 sort of shaped me really going. Because I'm never going to forget. I'll never forget. It was Friday, March 12th. We had a big event being put up at that moment. We got a call around 11 a.m. saying the mid install the show was canceled. And I kind of knew in the weeks leading up that COVID was going to really impact us. But it was in that moment where it was like, this is for sure. The next 6 months of the events and things that we had planned for the next 6 months was basically going to go with kind of no end in sight. And for me, it really couldn't have come at a worse time. We had just acquired what was then Lafayette Tent and Awning. Only about 9 months prior, I had bought American Pavilion a little over 2 months ago. And so, while I was still getting up to speed on the two businesses, all of a sudden I'm faced with this catastrophe in COVID. And so I remember just going to sleep. I couldn't sleep at night. And, I woke up the following day, drank my cup of something. I've actually, in my prior life, prior to owning a tent rental company, I was actually a investment banker specializing in helping companies through periods of distress. Not so dissimilar to the 2020 that I think a lot of us had, or certainly thought we would have as of that March. And so I was sort of really reminded that I actually had a playbook for how this is supposed to go. I may not have the hand that I wanted to be dealt, but I kind of knew the steps I needed to take to really look forward. And I think that experience, helped recreate our plan for the rest of 2020. And it also kind of helped remind me of some of the experiences I've had that I want to share with you guys today about, companies go through rough patches all the time. And the rough patches is, what do the really great companies do? And what do the sort of so mediocre companies do? And so I think a lot of what I'm going to share today is really more born out of seeing companies hit a turbulent time in their industry, and then picking out the things that I really saw them do to thrive and survive versus the ones that didn't. And then I'm going to talk about some concrete actions you guys can take to implement these things, and what should you be doing in 2021 to get your organizations in a similar spot if it's not already there now. This next slide is really born on my experiences in dealing with businesses across multiple industries. I worked on multi-billion-dollar transactions. I worked on the Caesars bankruptcy. I worked on Radio Shack's bankruptcy. I worked on a handful of smaller other ones that some went really well and others didn't. And there's one in particular, a company called Cetera. None of you guys will have ever heard of it. It's a financial services company that serves a bunch of investment brokers, and had 4.5 of the check marks that you see here on the screen. They had a great management team. They did previously show a track record of profitability. They did understand. They knew who their customers were. They knew what they wanted to do, and they'd been reinvesting in the company. The one issue that they had was they had recently been acquired by an owner that had, subsequent to the acquisition, had some accounting troubles. And so all of a sudden, all these 5 things were put into doubt. People weren't totally sure if the profitability that they shown was, and it caused a chain reaction where they were forced to be put up to sale, and the best offer that the company got was barely half its debts. And so it was forced into bankruptcy. And through the bankruptcy, the company got some new owners. And less than 18 months later, the company was sold for just over 3 times the amount. And really, why is that? I mean, really, they really did have all 5 things. The management team was incredible. They'd been together for a long time. They were diverse. They each had their own tasks that they were successful with. They all spoke with passion. They did have a track record of profitability. It was a business that had been around for a long, long time. They had a plan for growth, and they could back it up with charts and data. They had a plan to grow market share within their lead from their other competitors, and they had reasons why people would switch over to them. Clear corporate identity. They absolutely knew their strengths, and they also knew their weaknesses. That's really critical for a great management team, is understanding where are the areas that they need to shore up, so that are the hurdles for people choosing them, and their marketing was consistent. And so really all that happened 18 months later was simply, under the new ownership, they had another 18 months of accounting that showed, hey, the old owners with the accounting, it hadn't infiltrated this asset, and they ended up selling for over 3 times. So, these to me are the 5 most critical characteristics of a valuable, successful business. And I think if I'm sitting in your seat and you're kind of thinking about these things, you may not be thinking about a sale or financing or anything, and you may be thinking, hey, I want to own this business for another 20 years. Well, that's awesome. That's why these are the things to get into practice now, because implementing these things really doesn't take months, it takes years. And then once you've accomplished it, it's going to take a few years of that track record to really show the value and demonstrate that you really have these 5 things here on this slide. And I'm going to talk a little bit more about the things I think most people within our industry should be doing later on in this presentation. So, a few observations in the tenting industry for me. I've only been in it now for about 18 months, so consider my view an outsider shaped by seeing lots of different industries in my prior experience. The first thing that's going to seem obvious to you is the industry's small. I mean, I looked at our IFAI conference today, and there's a lot of familiar names and faces that I've already seen. We really are a small, tight-knit industry. But what that means financially is, I've been kind of trying to gauge about how big do I think this industry really, really is. And, if I had to guess, I think our industry is $1 billion to $1.5 billion in total, which may seem like a big number, but if you compare that to the smallest business in the S&P 500, we're at best a quarter of that. So there's businesses out there that are, in fact, there's many, 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 many businesses out there that are much bigger than our entire industry. If we got everyone together and combined one sort of super tent rental industry company, from a big investor's point of view, we're still relatively small. And so what that means for us, the good news and the bad news, is that means that there's not a tremendous amount of institutional investors in our business. It means that there's not as many forms of capital available to us, because there's those types of people need scale in order to make those kind of investments, because usually companies like that, if they want to make one, they're going to want to make multiple. And so the industry really is small. And the other thing, of course, is that we're fragmented. Now, I do know that there's businesses that are in our industry greater than 25 million, but what I've seen is there's kind of this glass ceiling to growth. I don't have a good solid reason for that, but it seems like there's a lot of businesses kind of in the $3 to $15 million range, and only really a handful that are much bigger than 25, and maybe only a couple that are bigger than, say, 50. And I think that just really speaks to the fact that, our industry, that, if you're thinking about growing and you're at a certain tier and you're really trying to think about, how do I get beyond maybe 10 or $15 million of revenue, all I can say is what got you to 15 is not what's going to get you to 30, and what got you to 30 is not going to get you to 60. So I think, because we've seen a lot of really smart people try and fail, we've got a lot of really smart people in this industry that have not yet grown their business to that size yet. So my reaction is that it's much more challenging than maybe meets the eye. Another obvious, this is again probably more obvious for people inside the industry than myself, but relationships are so crucial. The big 10 companies that are scaled, they have a ton of friends. They're generous with their time. They're generous with giving people help. I've seen a few companies take the strategy where they really want to own maybe some small part of the market, and they've got sharper elbows, and that's fine. That could be a sort of a core business, but my observation of the business is simply that the really great tent industry, the really great tent companies are generous with their friendships. The third point I want to make is that, inventory in our industry, it seems like there's a lot of it, even during our peak. I had a chance to look both from an investor perspective, as well as just, seeing some of our friends and allies places, is that there's, even at peak times, there's a lot of inventory on people's shelves. And I think, as you think about this business going forward into 2021, maybe there's a few companies that are going to be acquired, or may otherwise go away. The good inventory is going to end up finding a home. And so that kind of leads me to the next point, is that competition really is going to remain pretty high amongst us, because the really great inventory is just simply going to find a new home at another more efficient tent company, and the really talented people are going to be hired by these other ones. And so maybe there's a brand that goes away, but I think the general supply of inventory is going to be widely available. COVID, that said, I think COVID will present some opportunities. I know that there's going to be some scheduling conflicts that previously didn't exist. I know a lot of tent companies have kind of built I'll call it their peak schedules over time. And so it kind of neatly fits together, where maybe there's a 6-month period where the schedule is full, because it's been filled up with a few of the empty spaces that people have had, both in their inventory and labor. And now with COVID, what a project that may have been in May is going to move to September. Well, that's unfortunate, because your other big job is now in September. And so what I think is going to end up happening is things are going to get out of order, and some tent companies that have been doing a job for a long time may need some additional help, or maybe that a company got acquired, and the event or the client may just simply want to rebid it out. So I think that there's going to be more opportunities to bid for projects than there have been in the market previously. And again, back to my earlier point, I think the inventory and talent will find new homes. And the other thing that we're projecting, within our business, is we think obviously 2021 from an event space will be much better than 2020. Certainly, I don't think we're going to be back to 2019 or 2018. I think it's still going to be very tepid. I think most jobs will probably be smaller than they've been before, because just like us, I think we found, a lot of us found new homes for our industry, for our tents, whereas, a company like, say, Live Nation they didn't really have an alternative. And so the less well-capitalized clients are just going to have to scale down, and they're going to be a little bit more cautious about their 2021 events than they might have been in the past. So I think this is a question that I get a lot is, what should I really do with my business? Should I buy? Should I sell? Should I finance it? So I'm going to touch upon a few of those things. And I first going to spend a couple minutes just on if you are facing some, challenging times. I mean, 2020 hit us hard. There's still clearly an impact of COVID in front of us. We still got another 3, 4, 5 months of winter before, presumably a summer season would really start in earnest. And so, if you're sort of in financial trouble now, you might be thinking like, I'm not sure if I can keep the lights on. And if that's happening, what I will say is, they're really, people have been there before and people have done that before. And I have personally advised companies on this many times. And I will say that no matter how bad it seems, you and people bounce back. And I think my best advice is, fix it now, because the sooner you can resolve your issues with the creditors, as soon as you can get back to your normal life, because there will be a normal life, after even a bad situation where you're considering declaring bankruptcy. And so with respect to corporate bankruptcy, this is different from personal bankruptcy. Corporate bankruptcy is really only feasible for very large companies. And in our industry, as I said before, there's only probably a handful that it would even apply to, because bankruptcy is extraordinarily expensive. Most bankruptcy cases that I was involved in, even companies that were only $100 million, cost $10, $15, $20 million by the time it was over. And so those companies themselves barely survive. So if you're kind of a $5 to $15 million company, bankruptcy is a lose-lose proposition for everyone involved. So that said, it actually creates an opportunity for you to go and work things out with your creditors, because if they end up forcing you into bankruptcy, it's actually worse for them. So the best solution for everybody is if you can go, if you say, hey, 2020 was a tough year for all of us. Believe me, if you haven't spoken to your creditors, they're going to definitely understand that. And really the approach is, and I could spend hours on this, really the approach is deal with the creditors that are most difficult to you. So, and I would start, if it was in my shoes, I'd start with any creditor that I have a personal guarantee on. It's typically going to be a bank loan, might be some vehicle stuff, and it might be your lease. Speak to those guys, let them know, hey, I've had tough times. I've got a plan. I'm going to liquidate my inventory, or whatever, and try to wind this business down, and I'll kind of pay you what I can. And you'll just have to reserve some amount left over for any sort of creditors that don't necessarily fit that criteria, and work that out. But I think what you'll find is if you're open and honest and communicative and don't try to hide stuff, I think most people you'll end up finding is, after maybe an initial difficult call, reality is reality. And at the end of the day, we all had a tough year, and I think you'll find a way to sort of work it out. The next part is sort of financing. There's a lot of question marks about financing, and the one good news about our industry and not having institutional investors in there, in some respects, there's not that many options available to us, which means good news, there's not that much you need to know about. And the financing options that are available to you, that I think that I would recommend to people are, primarily through your local commercial bank and credit union. Those bankers are very conservative, and for the most part, they won't let you get into a loan that you really can't afford. And so if you're having trouble getting a bank loan or an SBA loan or some type of loan, and you don't have to pick one institution, I think when we go out and get loans for small businesses, we obviously go from generally pick anywhere between sort of 3 and 7 commercial banks, but we go out, their terms are all, about the same. But the good news is they won't really let you get too far in over your head. And that kind of leads to my last point on this, on the financing thing, is you don't want to get into debt you don't understand. And that's why, like, the hard money lenders, credit card debt, I tend to find that companies just never end up finding their way out of it. And so you end up spending all of your time, months and years, trying to catch up to payments or creditors that really won't relinquish on you. And so if you stick to these commercial banks, you'll sleep better at night. Those banks, if things do get tight again, they won't come after you the same type of way. And you're going to have a much easier time working with them now and into the future. With regard to selling, I would sort of put companies into sort of 2 different buckets. There's the companies that had probably a pretty good 2020. They got a lot of COVID tents up. They got a lot of long-term stuff up. So their financials may look even great in 2020. And then there's another bucket of companies that may not have done so well. And so they're not sure that they want to keep doing this. And so they want to sell. If you don't have to sell, my recommendation is do not sell in either one of those cases. My case to you is, if you've had a good 2020, that is a wonderful data point for you when you decide to sell 2 years from now. Because I think the business you'll want to sell and you'll get the most value for is when you're able to demonstrate what a regular year looks right for you again post-COVID. And then you're going to have this wonderful data point to say, not only do we have this great business in 2022 and 2021, but we were really nimble. We have this really great team, and we were able to survive COVID and thrive. And that, to me, from an investor's perspective, would make a really strong case to create a lot of value for you as an owner. And then similarly, unless you need to sell and you've had a tough year, whatever your price expectations are, lower them by half. There's not going to be a lot of people interested in buying a tent business. There's a lot for sale right now. And I think at best, you're probably going to get sort of cents on the dollar for what your assets are worth, because there's just a lot of inventory in the market, and there's a lot for sale. So don't sell in 2021 if you can avoid it. And then finally, acquisitions. I would just say I've seen a lot of companies make bad acquisitions of each other. But most businesses I've looked at had acquired somebody else, and it never seemed like it worked out very well. It seems like they paid more than they got out of it. So with that perspective, I would just say that if you do decide to make an acquisition, I would do is if you got a ton of cash, overwhelming financial sense, such that you will be not only acquiring really high quality inventory, but you'll acquire a lot of clients that you already know to how you would serve them, who they are, and would really sort of expand whatever market you're already in and would create an additional market share. But it's got to make overwhelming sense. Other than that, I think we've got a more difficult 2021 ahead of us. I think cash is always the most important thing to have for any company. So if it's me, I would tend to hold on to my cash a little bit longer. So finally, I think with all that, what I want to talk about is, what are the things you should be doing in 2021 to prepare your business, whether or not you want to sell it in a year, 5 years, or hopefully, not for 10, 20, 30 years from now. And the first one is, and this is the most difficult, and I'm so glad Rita was before me on this, is you really need to build a complete management team. And what I mean specifically by that is really you, the owner, cannot have any of those key roles. I think the mistake I see a lot of businesses make when they try to sell is the owner still retains some significant, important aspect of their business. They may hold a lot of the client relationships. That's probably the worst one. They may spend a lot of time still out in the field and be the guys that put up the tents. But a good part of the business really is them. And so right now is the time, if you're ever going to sell your business, is to start doing succession planning now, and figure out, who would be the company president if you stop showing up on Monday. And if you don't know who that person is, you need to train the people internally somebody to do that internally, or you need to recruit somebody to take on that role. And I'm not going to dive into, all these different roles here, but I think the point of these things is these are all things that I think you should check off in terms of people that are not you. Someone should be exclusively responsible for it. And people can wear multiple hats, but at the end of the day, the owner shouldn't be the key person on any of these key roles. The other thing to do, and this is both for people considering to sell and considering to how do you run your business better, is put your business on paper. In one of the things that I've universally seen that companies don't do is really create a budget. And a budget isn't what you hope to do next year. I think, a budget isn't, hey, I want to do $100 million in revenue and $20 million of profit. A budget is, here's all my overhead, here's my rent, here's my salaries, here's my leases, here's my insurance, here's all the things that I need to pay regardless if I do any jobs. And then on top of that, for each job that you create, you need to create an individual budget and layer that in. So you see a complete picture of your business for each job you book and everything. So you can see every single job you have on your books, that you have on your schedule, and really projecting out what your profit and loss will be month by month before that month occurs. And so, if you're gonna hit a cash crunch, during the winter or whatnot, you'll see it because it's going to be in your budget. And so, I think this is complicated and tricky to do. I as a person who's recently done this for our business, we have a tricky business to do this in because our jobs are all different. They're chunky. But it's really important to do, and it's something that's going to take a while, so start now. And similarly, I think more companies are better about doing this, is really have a good itemization of your inventory. And I think just to take it one step further, from the perspective of an investor, the thing that you're going to want to be able to translate is, when I get a list of inventory from people, I get how many beams you've got, I got how many legs you've got, I got tops, triangles, sidewalls. I have no idea what that translates into, like how many tents you can do. And so I think one of the things you should think about as you think about your business is just get a rough sense of what that number is. There's no exact number, right? As we kind of know, these parts won't give you an exact number, but if you can do 50,000 square foot of clear span, or 100,000 or 200,000 or a million, kind of figure out how much square footage you have in each of these different categories. So you kind of have a sense of like how big your business is, because at the end of the day, your customers don't rent beams and parts and tops, they rent tents. And so it'll help you, the business owner, as well as investor someday, translate your inventory into revenue and profit later on. And then finally, just with respect to the project by project, is once you've done that, what I'd recommend you do is, once you've decided how you want to budget, is take a look at your accounting and make sure your accounting matches the way you want to budget it. And I think what I've seen a lot of times is there's not a lot of attention to detail in accounting, so expenses end up in weird spots. And once that happens, it's hard to understand. It's hard to make heads or tails of what someone's accounting means if things are ending up in two different places. So, I'd say that's my extra credit if you have extra time. But if you do anything this year, create a budget. Thirdly here, identify what your company's identity is. So strengths and weaknesses I think it's just clearly identifying what are the jobs you want to do and what are the jobs you don't want to do. And I think if I had to give an example, what I would say is, we're an Indiana-based attending company, and let's just pretend that I want to do weddings. I think one thing that I may declare for myself and for our business is that we want to do all the weddings in Indiana. And what that means is, it means two things. It means I want to do all the weddings in Indiana, but it also means that I then will be saying no to other opportunities out there. And if I want to say yes to those opportunities, then I need to incorporate that into my declaration. So the companies that really do this well are understanding what market do they want to own, and what do they want to have, and that what falls out of that is what inventory do you want to have, what kind of vehicles do you want to have, what kind of personnel you want to have, what's your marketing plan. It all sort of falls together once you have a clear perspective of exactly what it is you want to do. But if you're saying yes to things that don't fit that criteria, you're taking away attention and opportunities to be better within that declaration. So identify what your company really is good at, and say no to the things you guys are weak at. And if it's something you're weak at that you want to do, then that's an opportunity to strengthen it. Finally, this is something that I think plagues us all, probably both at home as well as our warehouses, is continuously optimize your inventory. I think a mistake that people make is they'll look at something. I put this stupid umbrella here on this slide because this is something we'd acquired with our business. I'm sure that umbrella is worth $1. And somebody can make the argument, well, somebody might rent that umbrella for $5. Is that in my declaration, in my business, we have not declared that we want to be the best umbrella company in Indiana. So we ended up throwing that umbrella away. And that getting rid of that umbrella did a lot of things for us. I don't think about that umbrella. It frees up a lot of space on our floor for the things that we do want to do. And so I think a lot of people make the mistake of is, man, I don't want to sell that umbrella or throw it away. It could be worth $5. So get rid of the stuff that's really just not making you money and taking up space, and do it aggressively. And I think what you'll find is it'll free up space to take better care of the things that you do care about. And at the end of the day, when someday you're thinking about selling your company and investors walking around, you don't have a whole half of your warehouse of stuff that really is just collecting dust. You want your warehouse full of stuff in fact, you want to have an investor walk into your warehouse in the middle of your peak season with it completely empty. That means you've accomplished your job. So, get rid of the stuff that really never seems to ever leave the warehouse, and get rid of it at any cost. And then finally, most importantly, is build cash. This is such a common mistake of really small businesses. I think every business should have six times the amount of cash they would need to run their business for at least 6 months with no jobs at all. It may seem like a lot of money, but I think, as you saw this year, is the unexpected may happen at any time. And I think the people that had aggressively went out and bought more inventory, maybe made an acquisition, had spent a lot of money for the owner's vacation home. Those are the businesses that have the most challenges, because now they're scrambling to build cash before they can pivot. So having an ample amount of cash in your business is key to a healthy company. I'm not going to talk about exactly how today. If you haven't applied already, go out and get your second round of your PPP loan. I think most of us are probably eligible. Talk to your local banker. If you don't have any loans, whoever holds your checking account. But before you do anything, if you walk away from my call without anything else, go get that second round of PPP loan and apply by the end of the week. It's super easy. Doesn't take a lot of paperwork. And at the end of the day, it's really free money to all of us. So go out and get that, build your cash. And I'd say be conservative on that stuff. So I think with that, Yeah, finally, I just this last page here is a little bit discontinuous here, but the three things you see here is, and these are questions that come up, is I get a lot of questions about, how should I do accounting? How should I approach it? The training the street here that I'm showing you here, that's training that I've done personally as an investment banker probably 4 or 5 times. They have some online courses that are available to anybody. They're about $500 for those. It'd probably take your accountant 40 to 80 hours to do. It's a lot of time, but that's the same training that Goldman Sachs does and JP Morgan does and all these big investment banks do. So if you're wondering what the best way to do it is, that's it. It's not anything else. That's it. And all it takes is time. So to me, I think there's no need to create a shortcut to great accounting. The other one, and this is, I'm probably like one of like 4 people to ever read this book. If you're ever thinking about selling your company, there's almost no books out there available to how you sell small business. There's a million books out there for how Google acquires a company, but there are no businesses on how to buy a small one. So there's this book called It Takes Two: How to Sell Your Company to an Institutional Buyer. It applies to any buyer. There's only a handful available on Amazon. It's a really great and practical book for anybody considering to sell their business at any time. And then finally, lastly, I've dealt with a handful of different brokers and investment bankers throughout my life. If you are thinking about selling your company, I'm happy to connect you with the guys that I would personally use, relative to where you are in the size scale, because I think that's really, really important. And if you are thinking about selling your company, you absolutely want to get one of those guys involved early, because selling a business, for most of us, I think you'll get the most value 2 to 3 years from now. So start networking, get to know those guys, start to gain their advice, so you can start to build that stuff into your business now, because it's going to take time to implement those things and show another investor that your business is valuable. So I think with that, that's my presentation, and I'm open for questions.
All right, looks like we have time for a couple questions.
Look, and that's okay. I think the thing I would say, just about, where you're at, I know people can be the most sensitive piece of information for most companies, and that's completely understandable. So, feel free to ask me any questions in confidence. You can reach out to IFAI, and I'm happy to give you kind of a advice, between friends to, help people be more successful.
But I have a question for you. So I notice a lot of companies, I've seen them in some of the Facebook forums and groups that we're in, that they'll just throw in a towel and all of a sudden just liquidate equipment. What's your recommendation? Some of these could be smaller companies, but what would your recommendation be? Would you recommend that that's just the best way to go, or should they try a local sale to another business, even though they're at a point where they're ready to liquidate?
Yeah, that's a great question, Nick. I think the approach that I would take is, if I'm thinking about that, is yes, get your inventory together, get your list together, and if your next move is to liquidate it on Facebook, there's almost no harm in sending it around to more people and making it more available. And ultimately, at the end of the day, maybe the business doesn't end up itself surviving, but more buyers create more value. And so you're going to do a better job, by getting your inventory list better together. You may ferret out some questions, and you'll just create more of a market for what you end up doing at the end of the day.
Because I would imagine everybody's business is worth something besides the inventory. May not be, and especially a situation like what's going on with COVID. If you have a small operation, maybe your business itself is your customer list. Something's got to be worth something to another company. And I feel a lot of companies, I see them sell themselves short, I think anyway, and just liquidating on Facebook.
I mean, that's definitely, I would say, like a last gasp. I mean, really, at the end of the day, though, what you need to prepare to sell your inventory to somebody is just I'll say your business to somebody isn't as complicated as you might think. It's a good inventory list. Quantify, again, I would say, don't tell me how many legs you have. Tell me you can do 300 frame tents, or you can do 100,000 square feet of P1 Lowe's or some numbers that are actually like a number I can identify. I have no idea what a leg is worth, but I know what a 100,000 square foot Lowe's is worth, right? So translate that stuff into a little bit more, that'll create value for you. And then the other side of it is, again, if you're thinking your next step is, hey, I'm going to liquidate, your financials don't need to be a state secret at that point, as much as you may want to. It may be your reaction to protect it, because once you're selling stuff on Facebook, now your financials are basically not worth anything. So I'd say, be generous and share your financials from 17, 18, 19. And the right buyer, probably be local. They'll probably know some of your really great salespeople or some of your field people. Those people are very valuable. And they'll probably know some of the customers you've got as well. So I think I'd say be generous with information. That's what creates the most value. The more information you can get, comfortable people can feel about their business. And I think that goes back to that point that I made about that Cetera company. They checked every other box, but there was a question mark about their information, and now the business was worth 1/3. So create good information, and your business literally could be worth double.
Great, thank you.
Thanks, Dick.
And it looks like Marcus Wild, it looks like you might have started to ask a question. Oh, there we go. It says, what has 2020 done has changed the way you consider proceeding with an acquisition going forward, regardless of the market?
Yeah, that's a great question, Marcus. One thing I wouldn't recommend is buying 2 tent companies within a year of COVID. But I think my reaction for at least our business now, and I think we're in Lafayette, Indiana. We've got really not any major metropolitan areas that we serve kind of exclusively. So, from an acquisition perspective, for my company, we've got kind of a lot of, I'll call it open ocean around us, where if another competitor goes away, there's not some geographic market that's good for me. Now, if I'm in, like, say, Chicago or New York or the DC area, there's really great tent companies in there that are competing against each other. And if one of those went up for sale and I'm one of those other companies, I would find that acquisition particularly attractive because I already kind of know the ins and the outs. I probably know a lot of how to deal with those clients themselves. And so the transition, the biggest thing with these sales is, like, how do you transition it? And if you kind of already know how to execute on the jobs, and you kind of already know the people, and you kind of already know their inventory, it's a really easy thing to say yes to. And honestly, that's why we bought American Pavilion so quickly after our original acquisition, is we were subbing work from them already. We would see each other at some of the farm shows that we worked at. So it was like doing another tent at a farm show we were already at was no big deal. So for us, it was a really easy way to say yes to that acquisition. And I would say that still holds going forward.
All right, and I think that's all the time that we have for questions today. So thank you so much, Ben.